All right. So a recap, we are talking about market structure, and I said price moved in three phases. In three phases: the upward, the downward, and the ranging market. Now, we are going to be talking about price moving in an upward direction. Please, if I'm fast, you tell me to calm down. If I'm slow, you tell me to fast forward. All right. I hope you are with me.
Yes, coach, I'm with you.
All right. So price creates low, high, higher low, higher high, higher low. Sorry, higher high, higher low, higher low. Then we have higher high. We have low, high, higher low, higher high, higher low, higher high. Now, for price to print a high, it means price will need to go up, come down, go up, come down, go up, come down, go up. Now, this is just like a basic way you can see markets moving. Now, for price to go up, like if price is in an upward direction, right? First thing you need to do is you need to make use of your trend line. All right. For a start, I will advise to always make use of your trend line. The trend line is going to give you direction. That is why it is called trend line. You'll be able to know that price is moving in a certain direction. Price moving in an upward direction. As you can see, price is moving in an upward direction. Anytime you see price moving in an upward direction, please always focus on the low, the higher low. Your trend line should be on the higher low. Okay, your trend line should be on the higher low. Since your focus should be on the support. Once price is respecting the trend line below, that is on the higher low, it means price is respecting the sub level. If I take this trend line up, it means the resistance level. I will still come to that. So now price is printing, for price to be in an upward trend, it means price will need to print a high, higher low, higher high, higher low. And for price to create such move, it means price will need to move up. And this upward movement is called, and how will I put it? It's called an impulsive move. And what you are seeing down, price coming down, is seen as a pullback. I think I need to write this. Using this to check. So price we need to create an impulsive move, then a pullback. Now this pullback, you can call it pullback or a correctional phase. And the pullback is price seeking to grab liquidity. So we have the impulsive move, another impulsive move, another impulsive move, another impulsive move. So if price is in an upward trend, price will create an impulsive move, a pullback, or a correctional phase, or a retracement. Pullback, you can call it pullback, retracement, or correctional phase. Impulsive move, correctional move, impulsive move. Now, once price is in an impulsive move, in fact, we have more impulsive move if price is in its original direction. And for price to be in an impulsive move, it means price will need to create volume. That is when you see candlestick being big. You see candlestick big, creating volumes. Once you see candlestick getting bigger and bigger, sorry, I'm trying to illustrate something. Once price is creating the impulsive move, like you see candlestick printing volume. So at some points you see fair value gap and likes of them. So it's something we'll come to that later on. So now, sorry for the break in transmission. So we have the
All right.
impulsive move, pullback, impulsive, pullback, impulsive, pullback, impulsive. So once price is pulling back to grab liquidity. And once price is going up, creating impulsive move, price is also grabbing liquidity. Anywhere you see price breaking structure to the upward side on any market, on any asset, just know that price is trying to grab liquidity. That is price grabbing the internal range liquidity. Sorry, I'm not confusing you. For price to pull back, price is grabbing liquidity. And as price is going up, price is grabbing liquidity. So what price coming down, price is grabbing liquidity. We call it the IRL, internal range liquidity. And if price is going up, price is grabbing the ERL, external range liquidity. Any break of structure, at any point you have a break of structure, have it at the front of your mind, not at the back of your mind, that price is grabbing what we call transactional liquidity. Anytime you see price breaking structure to the upward side, for price to push and break structure, push to break structure, push to break structure, price is grabbing what we call transactional liquidity. Any break of structure, price is grabbing transactional liquidity. Write that somewhere. So now, I hope you have that already.
Yes, sir.
So we have the impulsive pullback or correctional, impulsive pullback or retracement. Now, this is for the upward direction. Now, we'll now come to the downward direction. Let me change the color of this to this. For price being in a downward direction, price will need to create a high, low, lower high, lower low, lower high, lower low, lower high, lower low. Please, anytime you are drawing your trend line for a downward direction, always focus at the top, the lower high. For a ranging market, focus on the down, the higher low. For the top, focus on the lower high. Now, for the upward direction, you have the supports. For the downward direction, focus on the resistance. Because I'm not trying to confuse you. If you are confused, tell me to come again. For the support, if price is breaking this support line now, it means price is changing direction to the downward side. That's why I say you should focus on the supports. Now, for a downward trend, if price is breaking your trend line now, just know that price is changing direction to the upward direction. Take note of that. Now, for price to break structure to the downward direction, price will need to print a high, low, lower high, lower low. That means price will need to break structure to create a lower low. And for price to break structure, price is taking the transactional liquidity. Hope you get that.
I got it, sir.
All right. So price breaking structure to the downward side, price is being taking what we call transactional liquidity. So now for a ranging market, we only have the high and low. That is what we have. High and the low. That is just what we have. And when for price to have the high and the low, it means we have the resistance level and the support level, the resistance level and the support level, the resistance level and the support level. So now let's talk about I'm coming. Let's talk about some other concepts in line with this. So we are going to look at other concepts when it comes to market structure. Please never get confused on market structure, please. So there are some things I will need to tell you as we proceed. So we look at a change of character, sorry, or a market shift. Then we look at LQ sweep. So this is the next thing we're going to talk about now. We look at what we call a change of character and liquidity sweep. All right. A change of character and liquidity sweep. Now, how do you identify liquidity change of no, let's talk about okay, change of character first. Anytime price is moving in its original direction, and you see this, I'm changing this color to yellow or orange. Anytime price is moving in its original direction, and you see this, that is price breaking your higher low. Just write this down. Anytime you see price moving in its original direction, and you see price breaking your higher low, price breaking your higher low, breaking your higher low, it's called a change of character or a change of direction. It's shock, or you can call it market shifts. I love using S. I love using MS because it will make my charts to be very, very rough, very simple and brief. And for you to confirm that price has changed character or created the market shift, price will break structure. So it's to confirm to you that price has formally changed direction. And thereafter, you see price breaking structure to the downward direction. That is for an upward trend. Once price break your higher low, once price break your higher low, again, once price break your higher low and break another structure to a downward side, you may make reference to this video. It means we have a change of character. So let's come to the downward trend. Anytime you see price breaking structure, right? Now, you may see from the previous video, you see that price break our trend line and break structure to the downward side. So now for a downward direction, any price sweep your lower high, break your trend line, sweep your lower high, and breaks structure to a downward side, it's confirmed change of character or what we called a market shift. So that is that. So now let's talk about liquidity sweep. Liquidity sweep is when price breaks your higher low. All right. Liquidity sweep is when price break your higher low and continue in its original direction. This is what we call liquidity sweep. Price breaking your higher low and breaking structure in its original direction. That is what we call liquidity sweep. Now, look at this. Price took the transactional liquidity, break structure. Price was coming down, grab this liquidity, right? And take this higher low as liquidity and continue its original direction. So same way to this. Anytime for a downward trend, anytime you discover that price sweep your lower high and continue in its original direction, keep on respecting the trend line. It's seen as a liquidity sweep. So that's in that way you won't tag it as a change of character. You tag it as X. You can use X fine. All right. So we still have liquidity sweep when it comes to a ranging market. We have them a lot, and it's called turtle soup. Turtle soup. Price sweeping liquidity is called turtle soup. We call it turtle soup. We call it stomp hunt. Stop hunt. So we have it several times in the market. So there's something I'm going to explain to you again. We are running out of time. We have 9 minutes to go. Should I drop another link?
Yes, so please drop before even go.
No, Allah. I hope you are enjoying the class. Hope you are not confused at any point.
Um, just on the one you just talked about, now liquidity sweep and change of character. I just have a question.
All right, don't worry. Let me finish my explanation. I'm not done yet. So now, still on the change of character, right? So let me go over here. So let's talk about change of character. Here is a chart I create separately for a change of character. Now, for an upward trend, whenever you see price breaking structure on an upward trend, right? And price break your trend line, and and sweep the higher low and break another structure to a downward side is confirmed a change of character. Price is going up now, breaking structure to the upward side, and it's discovered that price break your higher low and break another structure to a downward side. It's seen as a change of character. This is for an upward trend. For a downward trend, price is already in a downward trend. Price is respecting trend line. Now, before I talk about the downward trend, you discover that, sorry, why is my mouse not working? You discover that price is already in an upward trend. You discover that when price did a change of character, we now have a new trend, price respecting the trend line. So that means if price is to break another structure, we'll have something like this. Price will keep respecting the trend line, breaking structure to the downward side. That is why I said always make use of your trend line. So it's just going to be like a tool as a guide to you for you not to be in a wrong direction. So when it comes to narrative, how to like that explanation, like the relationship between monthly, weekly, daily, 1 hour, 15 minutes, 30 minutes, there seems to be a confusion to almost everybody. I'm going to explain to you so that you won't get confused. So let's just keep going gradually. I'm doing this is I just want to bring clarity to you, like clarity to open your eyes to one or two things. So now we see price moving in a downward direction, breaking structure in its original direction, right? And you discover that price break your higher low. We have lower low, lower high, lower low, lower high, lower low. And price now went back. Normally, we expect price to pull back, continue to break structure. Price sweep your higher low and break structure to the upward side, break another structure. This is now confirmed a change of character or a change of trend. And you may say, you see this trend line now, is to confirm to you that, oh, this thing, once you discover that price change character, bring out your trend line to assist you, right? To assist you. Then you discover that price keep respecting the trend line and respecting the trend and breaking structure to the upward direction. This is for a change of character. So let's talk about liquidity sweep in a bit. Now, this is price respecting the trend line, right? Price is respecting the trend, breaking structure to the upward direction. We have a break of structure. We have a break of structure. We have a break of structure. And we have a break of structure. And you may see the price will do what? We have the high, low, higher low, higher high, higher low. And price came down. Price came down, swept the higher low. This is called the sweep of liquidity. Once price sweep your higher low and continue in its original direction, it's seen as a higher low. I hope I'm not confusing you this time. When price sweep your higher low and still continue in its original direction, breaking structure upward is seen as sweep of liquidity. It's called liquidity sweep or liquidity grab. And like I said previously, once price is breaking structure to the upward side, price is grabbing transactional liquidity, grabbing transactional liquidity, grabbing transactional liquidity. And for price to sweep your higher low, this is what we call inducement liquidity or structural liquidity. Don't get confused. Just at this stage, focus on when price in an upward direction, price breaking your higher low and continue in its original direction, you see it as a sweep of liquidity. But in a scenario when price break this, just like this, price break this and never continue upside, break another structure, we see it as a change of character. That is, price has changed direction. So let's come to the ranging market. Now we have the high and low, the resistance and the support. Now I said previously that one price in an upward direction, always focus on the trend line. And when price is in a downward, in a ranging market, focus on the resistance and support because price can change direction to any area. So now when price sweep the high, we have liquidity sweep. When price sweep the low, we have liquidity sweep. We have this we see this several times in the market. Then this is price in a downward direction. You see, we still have the trend line. And look at what price is doing. Price break structure. Candlestick is what I mean by price. Oh, candlestick is what I mean by price. Price breaking structure to the downward side. Breaking structure, breaking structure. Breaking structure. Anytime you see price breaking your higher low, this higher low, sorry, lower high, lower high. Anytime you see price breaking your lower high and continuing in its original direction, it's called liquidity grab, sweep of liquidity. And like I said, price is grabbing the transactional liquidity, grabbing the inducement liquidity, and continuing in its original direction. So with this, ask your question before I tell you something. Or before I tell you something, let me show you something. But ideally, price does not move in zigzag. Sorry, sorry. Network took me out. Hold on. Network took me out.
Okay, sir.
So I was saying, hope you got my explanation.
Yes, sir. Explanation.
Hmm?
Yes, I did. I got.
All right. But look at this. Look at this. Price. Hmm?